Hi everyone, welcome to this week's video. Today we're going to be talking about structures you can use in business. So whether you're new to business or you've been well established and you want to restructure, this video is just for you. Alright guys, let's do it. Hi guys, just like we said in the intro, we're talking today about business structures. And it's really important that if you're setting up a business that you get it right first time round. If you're currently in business, you might be thinking now, being around about May, you want to start the new financial year on maybe a different structure, so i.e. restructuring your business. This is the time that you sort of really want to start watching this video and then also start acting so that you're ready for July when we come into the new financial year. Okay, so the first structure I want to really talk to you about today is the sole trader. So what is a sole trader in simple terms? So basically it's, I guess, you the individual operating as a business in your own name. And out of all the structures, all the ways to operate a business, it is the easiest and the simplest one to set up. It's so inexpensive. The reality is you get yourself an ABN and then also register a business name with ASIC, and on top of that probably get a good insurance policy. But ultimately what it means is that when you're trading in your own name. And I guess the one thing you also want to be very concerned with is just that limited liability piece, and we're going to touch on that later on when we talk about companies. But basically what it means is if anything goes wrong and the insurance policy doesn't cover you, well, possibly you could be personally liable for anything that happens with that business. The other thing to probably take note is that there's limited sort of opportunity to reduce tax, because you being the only owner, wherever the profits are have to go in your own name, because it's you who's earned the money. So easy to set up, but just not a there's not a lot of bells and whistles with it. The second option for setting up a business, and this is typically not used all that much, is a partnership. Now, partnership, what is that? In really simple terms, it's basically more than one person, so two people or more who will set up a business. So if you're flying solo, I'm sorry, you're not going to be able to run a partnership, which is obviously makes sense, right? But this could be really good for someone who, or a group of people, so a couple of people who will want to set up business together and want to do it with limited costs or limited setup fees to get running in a business. So I don't particularly like partnerships. I just think that they're really sort of outdated structure that especially a lot of accountants don't use anymore. But the reason I really don't like it is that there's so much risk around that if, say for example, the partnership was to fall over, that potentially what could happen is if there's any liabilities left in that business after I guess dissolving any assets or getting selling off whatever's in the business, potentially what could happen is if you've got partner A, only has $20,000 to pay towards $100,000 of liabilities. So I guess in this example, if the business had failed or you got sued and the insurance policy didn't cover what you were doing, what would happen is, let's say for example the liability was $100,000 that you guys had to pay out as a partnership, right? So what would happen is normally you'd say, hey, look, we're 50-50 partnership, so therefore you pay 50 and you pay 50. But with a partnership, liability is joint and several. So what actually happens is that if partner A only has $20,000, well, they'll pay $20,000, but then ultimately what happens is partner B is left with, they might have more money, they're left with the rest of it being $80,000. So that's one reason why I don't like it. I don't like that the liability is open. But yes, so if you are thinking about setting up a partnership, it's probably very similar to a sole trader in that it's probably the easy one to set up. We'd probably still go and get a partnership agreement. and something you could probably actually get drafted up by a solicitor, because you really want to look at what you're agreeing to as terms as partners. And then it operates a little bit by itself as well. So unlike a sole trader where you're flying solo and you're everything, in a partnership, it kind of is the same, but like still can operate a little bit to the side. It still needs its own tax file number. It still also gets its own ABN, and also registers for taxes like GST as well. I think the big key with this is that if you are going to go down the partnership route, you really need to get a really good insurance broker. And what I recommend to my clients is, when they are looking at actually going to business, don't call the insurance company direct. Suss out an insurance broker that can help you put together a policy that will actually insure you for what you're actually doing. So it's kind of like the square peg fitting in the round hole. So we want to make sure that you're covered with your insurance policy for what you actually do. And often what happens is, a lot of people in business don't find out, if they've done the insurance themselves and by not going with a broker, that they haven't been insured for what they're actually claiming against. So that's really important. So that's partnerships. The third structure I want to talk about today is a company. And often what I've heard as well over the years is that people often refer to their business as their company. And I've actually seen a little bit in practice where sole traders have actually come back to me saying, "Oh, my company," and they haven't been operating as a company. So a company is actually a structure. It actually is a separate legal entity. And it is completely different to the sole trader or the partnership. So it's almost like, the way I sort of describe it is, it's like, think about that. Let's say, for example, I have a company and I'm here, and then it's almost like we're saying we've got another person here who is the company itself. And, just like I could personally be sued, this company can also personally be sued. It can incur debt, can incur revenue, all that sort of stuff. It can do everything itself. So I want you to think that like there's an imaginary person standing right next to me when we think about a company. But the key with a company is, the reason why a lot of clients go down the route of actually setting up a company is that the big draw card is the limited liability. And it just means that basically, as limited liability, in simple terms, it means that the liability is limited just to the company. So if something was to happen in the company and the company's wrong for what it's done, the company can be sued, which means that me as the director over here, I'm actually a little bit protected. I want to say a little bit, quite a bit, right? As long as the directors haven't done anything that is illegal or wrong, or they knew what they were doing was wrong. So there's many examples of that, but for example, there's one called Insolvent Trading. So Insolvent Trading. So if you were trading your company whilst you knew that you could not pay any of your liabilities, I guess any liabilities being money you owe to your suppliers, and you couldn't pay those bills, but you kept on sort of collecting those goods and still kept trading, well, therefore that could be like what they call insolvent trading. But the other thing as well is, if you're doing something illegal and you knew fully that you were doing something wrong, well, they can do this thing called lifting the corporate veil, which therefore means that limited liability goes out the window. And it means that whoever is suing or suing the company can then come personally at the director. Probably taking a step backwards. So a company is made of shareholders. So shareholders are the owners. So if we had Bill and Bob and they wanted to set up a company, typically what will happen is they'll both own a share of the company. So we might say, hey, look, there's 2 shares in the company, and we're going to give 1 share to Bill, 1 share to Bob. And effectively what it means is that in their own names, they own a percentage of the company they've set up. As well, if Bill and Bob are working in the company, what typically happens as well is that we actually register them as a director, which means that they are the responsible person of the company. So that means that they keep good financial records. They operate the company day to day. They're doing everything basically as a representative of the company, and they're responsible. just probably some pros and cons of a company. So we talked about the limited liability. So just to go over that again, basically it means that in simple terms, you're protecting your personal assets outside of that company. And for a lot of people in business, this is something you want to do. Especially, if you've worked hard and you've got your home, you don't want to put that at risk. The next thing is asset protection. So I just pretty much touched on that right there. So asset protection is so big. So it, once again, just means that even if, say, for example, you didn't have many assets outside, if, say, for example, the company fell out of no wrongdoing of your own when you were operating that company as a director, that liability, I guess, it being sued or it sort of going to the position of whatever it's going through can stay in the company, which means that even if you had no assets to your name, it can't come back to you as being possibly, being a bankrupt. So if I was operating as a sole trader and things had gone entirely wrong, maybe out of no fault of my own, what could actually happen is that if I got no money to pay out all the liabilities for me getting sued or whatever has gone wrong, what can happen is I could basically go bankrupt. So I could basically go, look, I've got no money left to pay you guys, and I go down the bankruptcy path, which is something you don't want to do, because for quite some time in your life, it's always going to be this stigma that's around you. And even say, for example, going to get a credit card or getting some simple finance, it's going to come back to that, and you're going to be limited in what you can do. You're going to, you're not going to be able to get finance or even just do the simple things in life, like getting a credit card just to pay a few bills here and there for your shopping. One of the other great pros about having a company is the corporate tax rate. So being a company, you can actually get access to the corporate tax rate. And for those who are in business, being a small business, at the moment it's 27.5%, and that rate is going down to eventually 25% over the next few years. The other thing I really like about a company as well is it gives you that ability to grow. So instead of, say for example, if you had another partner come into your business, so someone wanted to join as an owner of the business, really what you could do is you could actually give them another share of that business. Very simply, there's a bit more to it than just that, but you could give them a share in that business, as opposed to if you had a partnership, having to go create a whole new partnership. So with a partnership, if, say for example, one of the partners decides to leave, or we put another partner on, we've got to technically set a whole new partnership up. So that's probably one thing I really like, is that ability to grow and bring partners in or new directors in to actually join the company. Probably the cons of it all as well, it is a little bit more to set up than, probably about 3 times as much to set up a company than it is to operate as a sole trader, or to set up a sole trader business. But also the ongoing costs are a little bit higher too. So your accounting fees tend to go up a little bit more because there's more work involved. Because as a sole trader, we can just, we still got to keep good records and good books of what you're doing, but we don't have to go to the extent in a company like we do in a company, where we prepare, financial statements, where, a financial statement could be like a profit and loss and a balance sheet, and really looking and making sure that those figures are actually true and fair. But then on top of that as well, when you operate as a company, we then need to do a company tax return. So you can see how those costs, that works a whole lot greater than what it was as a sole trader. On top of costs like that as well, is that now, because the company is a separate legal entity and it's over here by itself, when you think about that company there itself, when you take money out of it, you're actually taking money out as a wage. So, as a sole trader, you were just paying, you were just taking drawings, you were just taking out what you had at the end of the day, or you gave yourself an allocated income. But as a company, you need to pay yourself wages, which means therefore you've got to start running payroll. And on top of that as well, even though you're the director and you own the shares in the business, you're going to need to get what they call workers' compensation. So that is an insurance policy to ensure workers from getting hurt in the workplace, which means that they are properly covered from any injury or damages that might be caused whilst working for the company. So even as a director, once again, you're going to have to make sure you've got that policy for yourself. then the other thing to consider as well is, because you're paying wages to yourself, you're also going to need to pay super guarantee to yourself. So as a sole trader, I want to step back there. When you were paying just taking out some drawings, because they're not wages or classed as, I guess, the definition of wages, there's no super. So if you're starting up in business, having that extra, say, 9.5% on top of what you're paying yourself might be just an added cost that you don't want to incur. I think the other con for a lot of people is just really understanding those responsibilities as a director. And I think it's not as bad as what it sounds, but with a little bit of education and understanding and actually following some simple guidelines, it's not such a bad con as what it sounds. But if you don't follow those simple rules, you can, and things were to go horribly wrong, you can be held as a director responsible. So that's probably really sums up a company and what you're looking at. But like I said before, typically what happens is a lot of people will go down the route of setting up a company as opposed to the sole trader or the partnership. Yes, even though it's a little bit more expensive to set up and operate ongoing, it actually makes more sense, especially when it comes to that limited liability piece, just protecting what you've got. Probably on a non-financial sense, I think as well, when you're dealing with other businesses or other customers, when they see that you're operating as a company, it just has this perception that you're a bigger deal than what you are. So there's this perception that you're really here and you're the real deal. So I think that's another reason why I also like the idea of a company. Just like like all three entities, just getting on like taxes. So probably just to sum it up, sole trader does, like, basically when you do your tax return there, you do it just as like in your own name and doing your personal return. It's just like has a bit of a business schedule. Partnership has its own tax return as well, and then we distribute out the profits. And a company, once again, has its own tax return, its own set of financials. But the big piece is that, once again, that limited liability. Probably a few things that you do want to consider before you set up your company is you want to give yourself a bit of time before you want to start operating in it. Considerations would be as well, like, for example, if you're a business that's trading with a license, say a builder or a plumber, you can't trade in that. You really don't want to trade in that entity until you have that license in the company name. And I know that with builders, for example, it can take up from 4 to 6 weeks to get that builder's license in the company. So that's one thing that you definitely want to consider. We talked about insurance, we talked about wages and super, and yeah, so I think if you want more information, what I suggest you do is you reach out to us at NGO Accounting and we can talk about this. This is probably a really good structure for anyone that's wanting to grow their business and might be sitting there as a sole trader currently, or wanting to start a business and has some assets to protect with a company. So a company will give you that protection of assets. Okay, so thanks for watching, guys. That's the 3 companies. I just want to also note, we do have our Start a Business course or program that we offer, and in that program we also do go through in a lot more detail the different structures you can use when operating a business. I want to also lastly put out there that if you do like our video and this resonates and connects with you, and you got something out of this, I'd love you if you could share this with some friends or family or someone who you know is thinking about wanting to set up a business. And also like and subscribe and share our content. Alright, well that was a bit of information there about setting up business structures. I hope you enjoyed today's video, and we'll see you next time. See you later.